Australia's dominance in the LNG industry is based on its proximity to its major customers, Japan, Korea and China, a cheap resource and the willingness for those countries to invest tens of billions of dollars into major gas project development. But our hold on the market might be waning as Korea and this week Japan indicated their displeasure at changes to the Australian system, including diversion of gas that otherwise might have been earmarked to those countries into local markets, and also fresh taxes on the booming gas industry. Well, this week, the local gas industry, there'll be a new code of conduct handed down by the federal government that will identify exemptions from the $12 a gigajoule cap on prices. Suhas Nayak is a portfolio manager at Allan, whose background is in energy markets, and he joins me now. Suhas, good to chat to you about this. I mean, I take it for granted that Australia's got massive resources of energy. We'll just keep on selling it to the world. But you can't necessarily take it for granted always, can you?
No, I mean, we do have a lot of energy. At the right price, it will come out of the ground with the proper incentives to spend the money. And I think when people decide where to spend that money, there are lots of choices around the world. Australia is one of those. And where Australia sits depends on the cost of getting that energy out and the incentives to get that energy out.
Because right now there's a lot of major projects that are worth tens of billions of dollars to Australia in development that are ready to go. The Browse Basin is one. Some of the work that's going off on in the Timor Sea is also other work that's still to be signed off on, ticked off. And really, if there's any change in the political landscape here, we might find that work, that money goes somewhere else.
That's right. I mean, I think there are a few hurdles that projects need to get across at even good times. I think there's environmental hurdles, there's just whether the economics stacks up or not. I think in the last year or so, there have been further hurdles put towards gas projects that have made it harder to make the investment decision.
So what sort of hurdles are they?
I think so. One of them is domestic gas price caps, which for domestic buyers is an issue because it makes sanctioning projects locally that much more difficult because you don't know exactly what price you're going to get and whether you'll be able to ride the highs as well as the lows in gas prices, because gas prices are very volatile.
Because I've heard the argument also put that those gas price caps, which are designed to try and provide, if you like, some certainty in the market to get more gas into the local market, might also create the disincentive for new projects coming on, which means that there'll end up being a shortage of gas. So what was designed to create more gas in our system might inversely create less gas in the system.
Yeah, I don't think you get more gas into the system by putting a cap on prices. I think to make sure you get more gas out of the ground, you need to make it clear that investors will be able to both profit in good times, but also wear some of the pain. I think the last 5 years has shown the gas industry really wear a lot of pain, at least 3 years to 5 years ago. And it's only in the last couple of years they've been able to ameliorate some of that pain by getting prices that are actually quite good.
So we're looking at this chart here. So let's go back. And we only have to go back here to, say, 2019, something like that. And we're seeing a gas price there of just $4 per gigajoule. Now, we see during the good times it goes up to $70 a gigajoule. Now, that's as Ukraine is invaded by Russia and there's problems in the European markets. It's now come strangely all the way back to $12 a gigajoule, where the price cap is here in Australia. But what you're saying is over the course of that, the gas companies have got to work out where the average is, because they've got to make it during the good time, they've got to wear it during the bad times to justify the projects which are worth many tens of billions of dollars.
Yeah, I think you only have to look at the investment returns of these gas companies over the last decade or so, and they've mostly been poor. They've been below the cost of capital. And that's because gas prices have been low for quite a long period of time. And so what they're getting now is a bit of recompense for that really low period. And I think, high prices also incentivize more supply. And I think that's the part that, hopefully we'll see come out over time, because projects will get sanctioned if prices remain high.
But as you know, high prices also incentivise governments to tax those gas companies harder because they say, you're making a whole bunch of money. This is our sovereign asset. This is our energy. We want our take of this.
I think we've seen this not just in Australia, but all around the world. And I think it does disincentivize supply. And I think it is a problem over the long run. We end up paying higher prices over the long run through these sorts of interventions, even if the short-term impact and the short-term benefit to governments and consumers looks, quite attractive. Over the long run, it ends up hurting ourselves.
Okay, so even though at our government level, senior government ministers say, yes, gas is really important, it's the bridge that gets us to the other side of the renewables when technology catches up. But what you also understand is inside our current government, there's those who will say, no, let's get rid of all this gas. Let's close these projects down. We don't want it. We don't need it. We'll go straight to renewables, which impractical though it might be, the reality is that is a disincentive to the energy companies to say, right, we'll commit tens of billions of dollars to a new project in Australia.
I mean, I think everyone agrees that renewables is the end state. And the big question for everyone is, how long it takes to get there and what the transition looks like in the meantime. And I think gas plays a role in that transition. Without gas, you'll end up having more coal being burnt through that transition, which is not great for the environment either. I think over time, we do need new gas project sanctions so that we're not just reliant on coal baseload power, for example, in Australia.
Okay, so that's the reason why the code of conduct that's to be announced this week by the federal government, which clarifies where the exemptions lie regarding that $12 per gigajoule cap on the price of gas, is important because there have got to be exemptions so that some, as you point out, can get higher prices under the right sort of conditions.
I think the gas code of conduct has all these exemptions that end up excluding a lot of gas from that $12 gigajoule price cap. The question is whether that's enough to incentivise new supply. I think we'll only see that once projects start getting sanctioned.
I'll tell you, it's going to be interesting just to watch it. Suhas, many thanks for your time. Really appreciate it.
Thank you, Ross.